Hello, everyone, and welcome to the Leverage, Grow, Repeat webinar with Blue Pearl Group. My name is Kylie Mattu, and I'm a life insurance broker here at Blue Pearl. Today, we're going to have two speakers, Philip, our investor relations specialist here at Blue Pearl, who will speak on 2025 investment market outlooks and earning 10 to 12% investing in Canadian homeowners. Then we're going to have Candace, who is also a life insurance broker here at Blue Pearl. She'll talk about insurance strategies that will help you protect your wealth. Just quickly, some housekeeping before we get started. If you do have any questions, please enter them below. You'll see on your screen a Q&A, and we'll get to them at the very end of the webinar. We have quite a mix of attendees today, and we want to just make sure and ensure that you gain valuable insights from both Philip and Candace on the full range of products that we offer and the level of client care that we provide. So thank you so much again for joining us today. Philip, I'll let you take it away.
Thanks a lot, Kylie. Put on my presentation. So good afternoon, everyone. My name is Philip Tai, and I'm the Investor Relations Specialist here at Blue Pearl Mortgage Group. So I want to thank everyone for joining us today, especially on this election day here in Canada. While the country is going to vote on who is best going to manage our future, we're here to talk about something even closer to home, how you can manage and grow your own financial future, no matter who wins today. So most of you may know us for our mortgage services. We're very proud to have a reputation of helping build our clients' futures through financing with their homes. But what you may not know is that over the past few years, we've expanded our services beyond mortgages. Today, Blue Pearl also offers carefully selected investment opportunities and now insurance solutions as well. Our goal moving forward is simple. We're here not just to help you with mortgage needs, but to help be your trusted partner to build your long-term wealth and financial security. Before we begin, we are required to provide this disclaimer. Please note that this presentation is for informational purposes only. It is not intended to provide financial, legal, accounting, or tax advice. This overview is a summary and does not constitute an offer to sell or solicit purchases. We strongly encourage potential investors to conduct their own due diligence before making any investment decisions. Thank you. So if we can summarize the last few months in investments quickly, the start of 2025 saw the end of an over 2-year bull run. As of today, the stock market has lost nearly $5 trillion in market value since its highs in January. I'm referring to the U.S. stock markets. We are seeing higher volatility that's caused by uncertain decision-making by the U.S. And most recently, BlackRock published an equity market outlook, and a couple of points really stood out. They said, the path forward will likely be paved with more volatility, as well as dispersion across sectors, geographies, and individual stocks. They also said, no one can predict the results of countless bilateral tariff negotiations, but we believe having a pulse on company dynamics, especially when the macro picture is unclear, can be a differentiator for our portfolios. To put it in human language, investing in the stock market in 2025 is less about riding the wave and more about dodging the wreckage. So why does this matter for Canadian investors? If you're investing it locally at your bank, chances are your portfolio is more connected to the U.S. stock market than you might think. If you regularly contribute to your RSPs or TFSAs through your bank, you've likely been offered mutual funds by your advisor. Most of these funds are closely tied to the performance of the U.S. stock market. So here's a quick exercise I often recommend to my investors. Pull up your latest RSP or TFSA statement and ask yourself, do your investments include names like Global Equity Fund, U.S. Growth Fund, or North American Equity? If so, you might see a lot of familiar holdings in these funds, Apple, Microsoft, Amazon, or NVIDIA. And if this is the case, you're likely exposed more than you realize to U.S. market trends. And in 2025, that means your long-term returns might be on a rockier path than expected. Let's take a quick look at the key risks investors are facing this year. Number one, political uncertainty. Uncertainty in policy in the U.S. is creating a lot of noise. From trade disputes to shifting regulations, markets are reacting to every headline. Sudden changes have already sparked major market moves. As a result, we're seeing increased global economic uncertainty. Global growth forecasts for 2025 have been downgraded by groups like the IMF and the OECD. Trade wars, geopolitical instability, and slowing economies like in Europe and China add more pressure on global markets. This is concerning because we have a problem with market concentration right now. Much of the market's performance is driven by just a few large tech names like Apple, Microsoft, NVIDIA, and Tesla. This lack of broad participation makes the market more vulnerable when these companies tumble, which we have already seen in the last few months. And related to this, we're getting to notice that the valuations may have been in a bubble territory. After big gains in 2023 and 2024, many stocks look expensive. Valuations are high, and we saw earlier in the year, even before the tariffs, that US tech valuations wobbled significantly when there were news of reports of credible competition coming from other countries like China. So are we in bear market territory? While it's a bit early to say for sure, let's take a closer look at what's fueling the bearish sentiments in the market today. Major market declines are real. S&P 500 dropped as low as 20% from its January highs, and there's been a bit of a bounce, but the Dow Jones is on track for having the worst April since 1932. Hedge funds, or so-called smart money, is taking a step back. Hedge funds are reducing their exposure and cutting risk. According to Morgan Stanley, they're lowering their net leverage, essentially playing defense while waiting for calmer conditions. Big tech is also under pressure. Some of the biggest names, as I said earlier, are facing real headwinds. Tesla's demand is softening. International competition is growing fast in AI, and earnings are missing expectations across the board. So enough of the bad news. Where is the smart money going today in today's market conditions? One of the biggest trends in global investing today is massive growth of private credit. Private credit means loans and lending that happen outside of traditional banks, including mortgage, investment corporations like we have here at Blue Pearl, private mortgages, and direct lending to businesses. In fact, private credit exploded into a $1 trillion asset class globally, grew over 3 times since 2015. Why? Because institutions such as pension funds, endowments, family offices are wary of the volatility of the public stock market. They want stable cash flows that are secured by real assets like mortgages and real estate. So Canadians now have access to the same kind of strategies through local mortgage investment corporations. They provide higher yields in traditional bonds, security through real assets, and the ability to invest in your local mortgage markets. Big pension funds are also investing billions into private credit right now. The real question is, why aren't more Canadians doing the same thing? So, Canadian mortgages, are they safe to invest in? Canada's mortgage market has a strong record of resilience. Even during the 2008 financial crisis, Canadian mortgages remained remarkably stable compared to the US. Why? Because of strict lending regulations and strong borrower protections that have historically kept our housing sector healthy. When you look at the long-term outlook, immigration continues to drive demand for Canadian housing, especially in major urban centers. That creates a solid foundation for mortgage-backed investments moving forward. Mortgage investment corporations like the one that we run aren't new either. They've been around for decades. Today, there are over 200 mortgage investment corporations operating across Canada, serving investors who are looking for consistent, secured returns backed by real assets. So who are we? Blue Pearl Mortgage Group was established in 2014. We just celebrated our 10th year anniversary last Christmas, and we cover most of the provinces here in BC, in Canada, including BC, Alberta, Saskatchewan, Manitoba, and Ontario. As a mortgage brokerage first, we have access to hundreds of deals every month that our mortgage investment corporation and our other investments draw from. We have a track record of funding over 500 mortgage deals just in 2024, and we are expanding our opportunities to include investment, wealth building, as well as insurance. So we offer 2 investment opportunities right now for Canadians who want stable, strong returns outside of traditional stock markets. First, we have Blue Pearl Mortgage Investment Corporation. We invest in residential mortgages, mainly in the lower mainland of BC. And the fund has delivered an impressive 10.03% annualized average returns from 2018 through to 2024. It's also RRSP and TFSA eligible, making it a great choice for tax advantage growth. We offer monthly DRIP options as direct reinvestment for compounding, but investors can also choose to take out distributions. Second, we have the Blue Pearl Quick Loans. This fund focuses on short-term, high-interest loans, offering an annualized average of 12% returns from 2019 to 2024. Just like the MIC, Quick Loans offers a monthly DRIP, but also you can take out annual distributions. Quick Loans cannot be invested through registered accounts like TFSAs and RSPs, however, but they do have an easy online investment option through FundFunder. And it's a great option for folks who already have maxed out their TFSAs and RSPs, or even corporate accounts. In fact, one of our investors mentioned that they wanted to invest in Quick Loans for a grandchild of theirs. They wanted to teach their grandchild the power of compound interest. So instead of buying the grandchild a gift, they invested $5,000 for that kid's future. You know, pretty good nest egg for a young person these days. So both funds are designed for investors who want strong yields, security through hard assets, and flexibility. So our return history has been relatively stable over the past few years since our inception in 2017. We've averaged about 10.03% over this time. Our lowest performing year was 2023 with 9.14%, and that was when interest rates were very high. And as interest rates came down in 2024, we had 10.69% returns, our best year ever. This is mainly fueled by larger numbers of individuals coming for refinancing, meaning more deal flow, and better deal flow means better pick of the litter for our MIC. I always like to analyze, how Blue Pearl Mortgage Investment Corporation compares to some of our competitors over time. And by competitors, I mean other things that individuals can invest in. I did a selection of very common mutual funds that a lot of folks who are interested in invest in through their RSPs and TFSAs. I've also included GIC accounts. So let's take a look at Blue Pearl Mortgage Investment Corporation's performance over time. If you had invested $25,000 at the beginning of at the end of 2018, you would have today $45,376 by Q1 2025. This is stable cumulative growth. Every month we pay out either through distributions or, in this case, reinvestment to our investors, the earnings of the month from our mortgage business. So these numbers are cumulative over time, 10.03 average, and about between 7 and 7.5 years, you will actually double the amount of capital that you have through investing with us. Now, if you invested in some of the more common RSPs, like CIBC Global Equity Fund, which is highly focused on the US stock markets, you actually see some respectable growth between 2018 to 2021. But then you are subject to market volatility, and you see a massive drop in 2022. Things recover by 2024, but by 2025 Q1, as I mentioned earlier, we're facing a large drop. I mean, at this point, you're lucky to make $35,000 from your $25,000 investment. Similarly, TD monthly income, you are only at this point $29,000 after 7 years of investment. Through a GIC, this stable growth, very safe, however, but you're only making about $5,000 after 7 years in your account. Not a lot to show for. Now, some more information about our quick loans. I talked a lot about our mortgage investment corporation, but for our quick loans, we provide 12% annual returns, compounded monthly. If you do decide to DRIP, minimum investment is $5,000. Again, a smaller investment size than our mortgage investment corporation. And the great thing about it is that it's easily investable through fundfunder.com. You basically open an account there, and you're able to get your account funded and invested within about 2 days' time. So great option for folks who want to have a higher return and don't need a registered account. Now here's how we succeed at both our mortgage investment corporation and in our Blue Pearl Quick Loans. We have a team of very skilled brokers. We have over 25 brokers here in our office here in Surrey, BC. and they cover most of the provinces in Canada: BC, Alberta, Saskatchewan, Ontario, and Manitoba. So we are currently accepting investors for both the Blue Pearl Mortgage Investment Corporation and Quick Loans. The minimum investment size for the Mortgage Investment Corporation is $25,000. Quick Loans is $5,000. If you have any questions, feel free to ask them in our Q&A here. Please also feel free to give me a call. We can take a picture of the screen here. Give us a call here. Look for me. My name is Philip. Send us an email or get in contact with us through our website here. So thank you very much. That concludes my part of the presentation. Now we have our next speaker, Candace, who will be giving a presentation on her insurance solutions. Thank you.
Thanks so much, Philip, and welcome everybody. I appreciate you taking time out of your day to come and learn from us. Our goal here at Blue Pearl is really to help our clients with all services, including protecting their largest asset, which is actually your health. So how do we do that? Income protection is forefront. Let me ask you a simple question. If you had to take 6 months to 12 months off of work without any income coming in, how would that affect your financial future? We want to help you supercharge your emergency fund. So if you look at the amount of time it would take you to prepare to take 12 months off of work, for typically less than $100 a month, we can help you really reach that point. So first way we can do that is through critical illness insurance. And critical illness insurance is designed to put money in your pocket tax-free if you are diagnosed with any of the 25 most common illnesses. So think life-threatening cancer, heart disease. Recently, my cousin was affected by multiple sclerosis, and this type of money really is life-changing. Now, in a scary time where you're having to prioritize your health, you're not worried about your wealth. You know that you and your family are taken care of. We also offer different types of products, including disability insurance. And this is really to help with mental health, but also physical health. So if you are incapable to perform the duties of your job for either of those reasons, this type of insurance kicks in a monthly supplement and will cover up to 65% of your annual income. You have money coming in to help you pay your bills, help with your grocery expenses, and for you and your family to maintain the quality of life that you're used to. Now, in some scenarios, that 65% of your annual income is not enough to cover your lifestyle expenses as well as your financial responsibilities. So think car loan, mortgage payments, cell phone bills. So we have a different type of insurance that we can offer you, which is called a universal loan insurance. You have money coming in to pay your financial responsibilities, those financial contracts, and then that way your disability insurance kicks in and you can use that for quality of life and lifestyle maintenance. The other thing we want to do is make sure that you're protecting your assets. You work so hard to buy a home. We want to make sure that no matter what, that stays in your family if and when you pass away. Now, whenever you have a mortgage, basically what's going to happen is you're going to have the lender call you just to make sure that if something happens to you, they're able to get their loan amount back. Makes sense, right? So you'll have a few different options. The most common one that you'll be offered is mortgage protection. And although this is very attractive because it's very affordable and there's no pre-approval, this can cause you a few pain points. One, the balance of your loan is only paid off. So if you've taken out a $500,000 mortgage over a 20 or a 30-year term, you've done a lot of hard work to pay that off. Although you're paying the same insurance premium, let's just say your mortgage loan is at $300,000, that's all that gets paid out. So now here you have a decline in value in your insurance. There's also no money to go to your family. So if you have children or you have other lifestyle expenses, now it's up to your partner to take those on a single income, which we know can be quite challenging in this economy. It's a pre-approval. So the unfortunate side here is that if there's anything from your past in terms of your lifestyle or your medical health history that wouldn't have been applicable, you've now been paying insurance the entire time without a guaranteed mortgage lend payout. We love term insurance for our clients because, as well as being affordable, you know what you're pre-approved for. Term insurance is great because the full amount gets paid out. So let's just say you had a $500,000 mortgage. That $500,000 goes to your partner. They pay off the balance of your loan, and now there's extra money to help with lifestyle, with children's tuition, or even childcare, which, as we know, would be really important. You have the term insurance for the duration that you sign up for, typically 10, 20, or 30 years, and each of our agents will help you find the best solution to meet your needs. Now, in addition to term insurance, there's also life insurance that creates wealth, and that's through a permanent product. Permanent insurance covers you until the age of 100. And in the event that you make it till age 100, your life insurance gets paid to you. So no matter what, this product gets paid out. You're no longer renting it. It's an asset that you own. We like to maintain those premiums for 20 years so that you're paying off your insurance while you're young and healthy. And then as you step into retirement, you're not taking or carrying over any financial responsibilities, which is key. Your life insurance is also creditor protected, meaning in any areas of financial uncertainty, this cannot be taken away from you. It's an asset that you will own forever. There's two different types of permanent insurance. There's universal life, which is for our more avid investors. With both products, you're going to have a premium that you pay into based off of your age, your health, and how much insurance you need. A portion of that goes towards the cost of insurance, and then the rest goes towards an investment account in your name, which you can withdraw from at any time. Under our universal life products, that fund is invested into mutual funds and index funds. So this is more, like I said, for the confident investor, somebody who is okay to see volatility and also is okay to manage it at various times in their life. Our whole life solution is a fixed premium, but you have a guaranteed investment here. So our brokers will work with you to build you an illustration. This is insurance and an investment that you can count on. It will continue to grow. And with both products, this is now a growing investment that you can access at any stage, whether it be for emergencies or actually building more wealth. You can take this investment out, and our brokers will also work with you to figure out what the best strategy is. There's several, but you can leverage this in a tax efficient way to either put money towards a down payment or, like I said, in cases of emergencies. We're here to help all of our Blue Pearl clients. Your success is incredibly important to us. Our clients are our family, so we want to work with you to figure out what the best solution is for you, whether that's income protection, whether that's life insurance to cover your asset, or whether that's wealth building insurance. There's 4 brokers here on the Blue Pearl team. You've met Kylie, you have myself, Martin, and Connor. All love to help you out. We're here for you. And it's a very simple process. The first thing that we're going to ask is that you meet with us and tell us a little bit about where you're at and what are your financial goals. We're going to look at your financial foundation and figure out where the most important areas are to protect you. We're going to show you a customized strategy so that you can use these types of insurances to, supercharge your emergency fund or build wealth. And then it's an application. We're going to walk you through each step. We'll make sure we're with you all the way to answer any questions. And at the time of approval, we'll also sit down with you to make sure that your insurance still meets your needs. This isn't a set and done scenario. We like to meet with our clients once a year to make sure that not only when they go to remortgage, but when they go to look at their investments, they have the insurance solution that meets them every stage that they're at. I'm going to put our contact details up here. Feel free to take a picture. You can reach out to us. We'll answer any questions that you have. I'm going to have Kylie take it away here, and I believe we're going to start answering any questions that you guys might have.
Thank you so much, Candace and Philip. I'll get you both to jump on for questions as well. In the meantime, we have our next webinar, which is going to be June 19th at 12 o'clock. Summer Smarts, your guide to wealth, homes, and protection webinar. We'll be going into a little bit more detail here. So I do see that we have a lot of questions actually, so I'm going to pull those up. What is a mortgage investment corporation and how does it differ from the real estate investment trust?
Great, I'll take that one. So a mortgage investment corporation, or a MIC, is a Canadian investment vehicle that pools investor capital together and lends it out as private mortgages. So that's what a mortgage investment corporation is. A REIT, or a real estate investment trust, is a type of company that owns and operates real estate properties, something like apartments, student housing, shopping malls, office towers, what have you. So with a REIT, you're actually owning part of the real estate. And while that may sound attractive to some investors, REITs have a lot of risks associated with them. So let's say that you're investing in a REIT that owns shopping malls. Well, if there's a retail consumer downturn, which we've been seeing the last few years, then these type of REITs will have those risks associated with them. Likewise, if you own apartment buildings, if the apartment buildings start to get old and you have to do refurbishments or maintenance, especially for elevators, then the REIT investors are liable for that type of cost through that corporation. Mortgage investment corporation, however, is more direct towards where it earns its money. It simply lends money to mortgage holders. Mortgage holders then pay back their interest and their principal, and the investors are paid out through the MIC. So I hope that answers your question. MICs tend to offer, steady income, and is less tied to some of the volatility we see, especially in property prices that REITs are subject to.
Perfect. And what markets or regions does the MIC mainly invest in?
Our mortgage investment corporation is very focused on British Columbia, especially the lower mainland of BC. The lower mainland is one of the top most active economic regions in Canada. So next to Toronto and Montreal, Vancouver is a great location. We have lots of head offices here. We have a lot of businesses, and we have a lot of immigration here. So that means that this particular region that we're focused on will always have a lot of activity in mortgages, a lot of activity in real estate that help us with finding good deals, and also help us in getting good security for the deals that we do.
Candace, this one's for you. Are pre-existing medical conditions excluded from coverage?
Really great question. Thank you to whoever asked that. And it definitely depends on the product that you are applying for. So the thing with insurance is that to get the best rates and the most ideal coverage, it is based off of your health. Now, that being said, we do have products that are guaranteed issue for pre-existing health conditions. It typically just means that you are excluded for that one condition. So just to give you a prime example, one of my clients was diagnosed with breast cancer 3 years ago, and she claimed on her original critical illness policy. She received a lump sum benefit that she used towards her current financial needs. We were actually able to secure a different critical illness guaranteed policy for her last month that now has additional coverage for anything else that would come up for her in the future. So it doesn't necessarily exclude you. We have something for everybody, but you are going to see the most affordable and the best coverage protections while you're young and healthy, which is why we encourage all of our clients to act on this urgently instead of when it's late.
Okay, and what happens if you outlive your term life insurance policy?
Really great question. So term insurance is actually a rent to own insurance. So you have coverage for the duration that you pay those premiums for. With term insurance, you will typically purchase a 10, 20, or a 30-year term. And at the end of the term, your insurance can continue. However, your premium typically changes annually after that. So the term 10, 20, 30 will lock in that premium and will stay level for the full duration. Now, if you want to secure that term 10, 20, or 30 at an ideal rate, and you choose to have a permanent product towards the end of your term insurance, you can convert that over and continue to have it. However, it would be at a different price point, obviously. And like I said, you only have that term insurance for as long as you pay your premium. So if you stop with your insurance, then of course you no longer have coverage.
Okay, and Philip, how often are returns distributed, monthly, quarterly, or annually?
Right. So for the quick loans, our distributions are annually. So we are able to distribute once per year. For our mortgage investment corporation, we because these are done through registered accounts through Olympia Trust, and they do have sometimes some fees with regards to transferring out funds. We suggest that our investors, if they would choose to distribute on a quarterly basis. To reduce fees. On an annual basis would even be better. If they do need to get a distribution, they can then take advantage of the compounding for the year as well as minimize transfer costs.
Perfect. And I think you went over this, but what is the minimum investment amount for each?
Sure. For the Mortgage Investment Corporation, it's $25,000 for new investors, $10,000 for existing investors. And for the quick loans, it is $5,000.
Perfect. Candace, how do I know if I'm underinsured or overinsured for my current life stage?
That's a really great question. And this is why we recommend that you consult with your broker at least once a year. What that broker will do will sit down with you and assess what your financial goals are and what coverage you have. And that's really where the key difference is. You can have insurance to cover your assets, but if you're not looking at what your overall financial goals are, there can be a huge gap or a huge area of weakness. So we offer a complimentary consultation for anybody who has existing coverage, whether that's through the bank, previously owned. Come and sit with us, tell us a little bit about your goals, and we'll meet with you and tell you a little bit of what's available to you and how strong your current plan is.
Perfect. Philip, I think here like a two-part question. What are the protections for the investor for Blue Pearl Loans portfolio? So in short, what's the collateral against this debt product for an investor? Also, are the 23-24 audited financial statements now available for the investors to review?
Mm-hmm. Okay, so I see this question is from Avi G. Hi, Avi. Good to see you again. I think we ended our first webinar a few months ago. So to answer your question with regards to security on the quick loans as is only available to our existing mortgage clients. So basically, these are folks who already have equity. These are folks who have assets through their home. And these are the only folks who have been in the past eligible to take a quick loans out. So just going back on the quick loans history, the reason we have this investment is because we noticed that sometimes, some of our existing homeowners, clients, had emergency needs, right? Whether it be a emergency repair for their home, emergency dental work, what have you. And they needed a fast way to get money out to address these needs. And it was difficult for them to get these loans from the bank, and also difficult for them to go to other sources of capital. So they ended up working with us. We know their file. We know what they're able to pay. We know also what their assets are and their loan to value ratios. Provide them with these with approval for these loans. So I hope that answers the question with regards to security. I mean, they have assets, they have equity, and that these borrowers are will. The second question that you mentioned, whether or not our sorry, I lost the question here. Our 2024 amounts, sort of financial statements are available yet. I think they're still going through the auditors. I will update you privately when we have these when we have these statements ready for review. So don't we haven't forgotten your request earlier. We'll definitely send them to you once we have them. Thank you.
Perfect. Candace, how do you help clients balance their insurance needs with their investment goals?
This is a really good question. So the first thing that we want to do is ensure that you have a really strong foundation. What we want to make sure of is that if you're an avid investor, if you have a financial or a family emergency, that you have the stability in your portfolio, but also through your emergency fund and debt ratio, that you don't have to pull out from your investments. So the first thing that we're going to do is ensure that, you have the proper protection. We're going to look at your debt service ratio and your emergency fund to make sure that they're within a strong foundation. And then from there, that's where we feel more confident with you going into your investments. Now, with our permanent insurance, there is the opportunity to invest inside of it. But what we recommend is that before a client has this type of product, that one, they have the rest of their necessities figured out, because we want to make sure that you have liquidity in your investment strategy to be able to access at any time and for any reason.
Perfect. Now, this isn't a question, this is a comment from Mike, which I love, so I'm going to share. I've had my monies in the MIC for 3 years, and I'm very impressed with the returns. As soon as I have more funds, I plan to add more to my MIC. I highly recommend this product.
Thanks a lot, Mike. Donna and I are working hard to make sure your returns continue to be amazing.
Candace, what happens if I can't make a premium payment? Does the policy lapse immediately?
Really good question. These are all really great questions. So thank you to whoever is asking them. No, that doesn't mean that your insurance is going to lapse. However, this is why it's incredibly important that you meet with us once a year to go over your current protection needs. If in between that year, your cash flow, your assets, your income change, we also need to meet with you, because we want to make sure that your insurance matches you, but also balance out your current cash flow needs. With the permanent products, there is a little bit more flexibility in terms of missing that, but there are things that we can do. However, if you find yourself in a scenario where you feel like you are going to miss that premium payment, please reach out to your broker immediately and as soon as you know, so that they can work on an action plan with you and they can communicate with the insurance company to make sure that your plan is not at risk.
Perfect. Philip, are returns reinvested automatically or can they be paid out?
Both. Returns can be paid out, as I mentioned earlier, with our distribution, but also they can be reinvested on a monthly basis. And if reinvested, you basically are compounding on a monthly basis.
Okay, and how diversified is the mixed portfolio across property types and geographic areas?
So as I mentioned earlier, we're focused on the lower mainland of British Columbia. This is, again, a very vibrant economic area, lots of homes, lots of home building, lots of immigration. So it's a great place to be when it comes to mortgage investment corporations. With regards to the types of mortgages we do, we focus on residential mortgages. And that's the sweet spot that we found that is the best risk and reward profile for us. If you invested in things like construction loans, for example, or commercial loans, then there's a little bit more risk than if you just focused on residential mortgages.
Perfect. Okay, we have 2 questions left, one for each of you. Candace, if a client was denied their claim for insurance, what would be the possible reasons why?
I mean, there's not a whole list of reasons, but this is why it's really important to get not a pre-approved product, but an underwritten product. So what happens is when you sign up for your insurance, depending on what type of product it is, you will go through underwriting to ensure that they've reviewed your lifestyle, your medical health, and your financial status. Now, with some products, they actually skip that altogether, and it's a guaranteed pre-approval. The dangerous side to that is that, let's just say you have a family health history of severe breast cancer. That's typically not something that an insurance company would want to take on. So if you have the underwritten product, you're going to know what that is before your policy is approved, so that there are never any surprises. Whereas if you look at something like mortgage protection, that's going to come up later once the actual incident happens. With any scenario, like I said, our clients are our family, so we work with everybody. I'm actually in the stages of helping a client who has insurance through the bank and is going through that process. We're going to sit with you, we're going to consult with you, and we're going to make sure that you have that shoulder to lean on all across the way. We want to make sure that you have access to somebody who's going to be able to help you guide those conversations, ask the questions, and ensure that we do what we can to make sure that you have that protection paid.
Perfect. And last one for you, Philip. How often do you provide updates to investors, and who should investors contact if they have questions about their investments?
Sure. So we provide monthly statements to all of our investors. They come automatically from our systems. They basically show you how much you've made that month. And annually, we also provide statements to show you your gains for the year. And we're actually quite easy to reach. Both Donna and myself, you can reach us through email. You can call us at our office here. And we're happy to field questions from you regularly. Thanks.
Perfect. Well, that's it. Thank you everyone for joining us, and we hope that you were able to register for our June event, and we will see you there. Everybody have a great afternoon.